How we doing? Happy Friday. Welcome back. Final hour session. We are sitting here at 6630 in the S&P. Another pretty interesting day of volatility. Lows at 6521, highs at 6661. Market makers perhaps failing the day again. 55 to 30 puts us up around 75 points. Market makers, I think we're at like a 55 or 60 plus minus on the morning. I don't recall from the 9 o'clock session. It was a pretty high market maker move or expected move. I think it was like 60, 65 or so. So maybe they keep it in there by the end of the day. I'm looking to see if we can, make a little run here in the next maybe 15 to 20 minutes back up into this sticky 45 to 50 zone. We got a lot of indecision right here. I would love to see this previous resistance on the day offer some support, maybe pop it back up here to this positive negative gamma around 66.45 or 50. If it does come up here, it's late enough in the day that I should have a pretty big profit trap on one of my iron flies. Currently, it's up $522 and potentially up to $1,800 if it's perfect around like the 50 and 55 zone. But I'm probably not going to try to hold that all the way. So if this gets up to, I don't know, $900 or $1,000, I'm probably going to take it. If I want to get really dicey and try to hold it to the close and try to pin this thing perfectly at, I want to say 55 or 60, I have like two overlapping profit traps. I also have my broken wing butterflies still running for some profit as well. So I'm going to keep an eye on this one for now. Let me set a chart alarm at 45 and see if we can get a pleasant surprise here. So these are my profit traps that I'm looking for. I have one at 6,600, one around the 50 to 55 handle. I don't think we're going to drop 80 points in the next 42 minutes, but nobody knows. So let's see what happens. I'll put a chart alarm here at, let's go 66.45 to 50 area. See if we can get up there and offer another push into profit. So let me edit this to 6650. That's kind of my sweet spot. So I'll watch. Like I said, if this is over $1,000, then I might take it. But that offsets some risk on the day. I did take a loss on daily profit play. We're trading at 33. The line in the sand, if you're still holding daily profit play, is 66.40. So it's close. Here is the original trade. I closed out for a loss. It's down to $1.55 or $1.65. I'd be down, $40, $45 right now, which is better than the $2.45 that I took. I took a $2.25 loss. So between the butterflies that I'm in, I'm actually going to net profit on the day. In between, hopefully, my traps, my profit traps on the iron flies and the butterflies that I've done, that we should be looking good for that, for a net winner on the day. Okay, just for fun, I thought about this morning since the market actually started to show signs of bullishness. Dragging a high to low. We came right back up towards the 50%. This is also why I was watching, to see where the day closes. I was watching this high to low swing. This is from yesterday's close to today's low. Just dragging a fib from high to low. We pulled back about half of the move from yesterday. So I'm curious if we can, not only pull back there, but kind of end the week, not at fresh lows, pulling back into this area, and that 46 to 50 zone might also still offer a bit of a trap into the end of the day. So wishful thinking. Chart alarm is set at 50. I'm watching on my other screen. So we get maybe another, 10 to 15 points to the upside. Positive negative gamma is sitting around, oops, what just happened? Oh, I guess I closed out that browser. Sitting around 45. So 40, 45, 50. Pretty attractive level for price. I'm just kind of hoping that we can kind of settle in here and dig into some magnetic pulls at the end of the day and maybe close there. So to be determined. What's happening, Royal? How are you? How's everybody doing today? We'll keep an eye on this for some profit traps. Let's go top down. SPX on the day. So we pulled back and tested the 100 period on the daily. If we go to the weekly, I think we hit the 21 period weekly, just off of it. Like the 20 period, I think was hit. The 20 period weekly was hit, offering some short-term support today. I said indecision in the image here. The thumbnail is market indecision. There are two candles that we're watching. October 10th candle lows were 65.50. Yesterday candle lows were 65.38. We closed near those lows. And we're sitting indecisive because we still haven't reclaimed the 50-day moving average on the daily time frame. So let's go to the daily. And I know my charts are a little messy here, but here's my 50-period moving average. Here's the October 10th candle. Okay. So if we go October 10th candle, and yesterday was almost a mirror image of that. Here is the low, 6550.78, and the close was at 52. So we closed like 2 points off the low. The low yesterday was 34, and we closed at 38 and change. So, percentage wise, it was eerily similar, where, high to low for the day on October 10th was around 3%, 3.14. And yesterday's high to low, I think, was a little bit more dramatic because we gapped up and had that kind of big fake out from NVIDIA earnings, and then everything rolled over late in the morning. So this is 3.44 yesterday. So, within 0.3%, that's pretty accurate. Scary how the market can kind of do stuff like that. We're like, is that what it tried to do? Is just have the exact same like de-risk and deleveraging? And maybe there's some obvious rotation. If you're watching this week, the heat map, Walmart was a big shining star yesterday, giving back some of that today, but there's a pretty big pump in Walmart. Let's take a look at the heat map today. Heat map today, we have 78% of stocks advancing. There's a lot of green. It doesn't undo what we saw yesterday, but Google, Amazon, Apple, Tesla, NVIDIA is flat. Financials doing well. Healthcare, great. Healthcare is bright green. Home improvement, restaurants, Home Depot's up 3.36%. This should be helping some of my options positions for Project Options Edge. We have some Home Depot exposure. I got a couple things in here that I'd like to take a quick peek at. So let's see here. Abbott Labs up. Adobe still looking good for January. That's up 44%. Amazon. So this week with the VIX above 20, I have sold some premium. Took a ratio spread for Amazon. I'm still holding Baidu for some exposure. Dutch Brothers is up about 82%. Probability profit in this one's like 96. I think it's fine to hang into this one to the part of January. My max profit here would be 99 cents. If I can close it out for maybe less than 10 cents debit, I might just take the profit there. That's only a ratio spread of 1. Cracker Barrel down a little bit. Kind of sitting in my profit trap, to be honest. So this one actually might maybe get lucky. I don't know. Maybe get a profit trap like $250 in that one. CEF is gold. CEG. This is Constellation Energy. That was a new trade for me this week. Chipotle, I was assigned on one trade. Did I get assigned? Okay, I need to do another covered call here for Chipotle. So I'm in 200 shares now. I will do the 200 call. So I'll add another 200 call. Let me see what that looks like. So Chipotle, March. I will go March and fudge. I was going to say I'll go April. All right. Sorry, we got 66.20. Give me a second here. I might look to grab some quick profits on one of my flies here. $260. Are we going to bounce hard? Should I just take the profit? We're coming in the final 35 minutes. I don't want that to be a loser. That's a 130 risk, which isn't a lot. Potential profit of $1,800. I just would love to see the markets make its way back to like 35 or 40 before the close. I'm just going to sit tight. This iron fly is up a little bit of profit now. Keep an eye on that one. This one could pay me up to about $900. Daily profit play is now break even or better. It's down to $1.05. I'll update that in Telegram. So it is update at 325. Debit is now 95 cents. Showing profit. So we grab the $1.20 if you want to close that for profit. looking pretty good. You've got broken wing butterflies that are showing profit. So that's a net winner on the day. All right. Experts saying 93% chance for recession. Yeah, but this isn't that why would you question the I mean, if it's mainstream, it's like according to sentiment, we're due for bearishness. According to recession, it's like I have a hard time believing that the market's really going to follow through on a recession without having some type of, I don't know. I mean, we could have like an exogenous shock or something like that. I don't know. I mean, I don't know, but part of me thinks the riskiest thing is going to be some type of like ugly flush that makes the bears think that they're right, and then it just promotes another ridiculous V bottom. I mean, I'll throw it out there, like the 2, 3, 4, 500 people that watch these videos every day or watch these live sessions. Would anybody be surprised if the market is, let's say correcting, let's say the bears take it a little bit deeper to the downside, and we flush to this like 200-day moving average, or we flush down to this level, and all of a sudden the market is like Fed steps in, government says something, Trump says something, and we're right back up to these highs again in the next 6 months. That wouldn't surprise me at all. So it might get the bears excited for something. I just don't think it's going to be necessarily sustainable. I think that the trickiest trade would be if we do come down here, make our way back to the highs again, is giving everyone the false sense of security that we're back up to highs, and then we put in a topping pattern, and then we actually have a bigger correction. Like if I'm going to be a bear, I'm looking to see if there is actually a bear pattern that emerges. I don't think that this is necessarily enough to say like the bears are here and the bears are winning. Sentiment is still ridiculous. Sentiment's ridiculously negative. So we'll see. All right. So I got some profit traps and watching closely. 6,600 could pay really nicely here in the next 30 minutes. If we get up into 40 to 50, that pays really well as in addition. But market makers, might do their job as we talked about this morning. So we opened up here. I don't recall if anybody was in my daily profit play. I think we saw like a plus or minus 65 in the day, and right now they're about 60 points. So technically, where we are right now is within the market maker move, which means they've done their job for Friday by failing yesterday. It's not a surprise that they come back and do their job today, right? So what I need to pay attention to is this is about a 30 wide profit trap. This one is about a 50 wide profit trap. That's 75 to 30. So about a 40, 45 wide profit trap. Hopefully we're not going to close here end of day in the middle, but I still have 2 broken wings and net profit on the day with, I took a manageable loss on my daily profit play. So minus 225 and then a broken wing for $1. So 225 minus, sorry. So I'm at negative 225. Right, I add $1 to that, and then I had another broken wing for $1.75. So I actually net profit on the day. I'm looking to see if I can get a profit trap at the end of the day that pays upwards of $900, $1,800, $1,200, and the only ones that are probably realistic would be this one is realistic for about a $900 winner, or as much of that as I can get. This one is realistic for maybe a $1,300 to $1,400 winner, or this one for upwards of $1,800. But hopefully we're not going to finish in the white. If we finish in the white, then I'm going to slip through those little, dollar risks that I put on those flies. Okay. But market makers, are doing their job, which is not a bad thing. Okay. Anything else here working? Nope, we're good. So I'm just going to wait and see how things kind of settle in. 60. All right. We'll keep an eye on this stuff. All right. So we still have 30 minutes. Be an interesting 30 minutes. It's tough being a bear out here betting against the Fed and Trump. I know. And that's what I'm saying. Like, I just think that the markets are probably not going to reward the bears for being so bearish. Everyone is bearish. Sentiment is garbage. University of Michigan sentiment, everyone thinks a recession is here. Look, I mean, in a way, it's like we already have a recession. We've had a recession since 2022 in some way, shape, or form. Some part of the economy, some sliver of the economy, some sector of the economy has been in recession. So even 2025, it's the K-shaped economy. What's been doing really well? Tech until just recently with some of these like scary deleveraging events. Um, but staples have been beat up and defensive have been beat up, but it's starting to rotate in. Walmart, like I said, kind of the big star this week, but markets are coming back in a pretty impressive way for at least today. So good stuff. Let's see here. Doing pretty good. The rest of the week, can't complain over weeks. Yeah, all's well. I did a lot. I mean, I took like 80 trades today, I think 79 trades today, and posted quite a few for Project Options Edge. I sold a lot of premium today, and part of that was the elevated VIX. I did a ratio spread on. I think I did it on Project Options Edge ratio spread. Let's see if I can find it here. Come back to these in a second. Fudge muffin man, should I? Hang on. I don't want to take profit on this one, but I might. So we're at 05. Let me see. I might just take profit on this one here. This is kind of annoying. This one is, oh, never mind. This one's break even. Now I'm risking 130. It's like maybe I close out this one at break. I don't know. I think I'm just gonna. I hate to just like take the risk because it's $130 risk, but can the market do? I mean, that's a big push, man. We'd have to get like a 30 to 44 push in the last 28 minutes. Like it's possible, but probably not likely. But 130 is not a terrible risk. So I don't know. I think I'm just going to roll the dice today. The profit traps are big enough. I want to see if I land one for the day. Just going to see where this kind of cash settles. All right. Hopefully it's not going to slip between the cracks on my profit traps that I set. Daily profit play, is showing a winner. That would have been a $1 to $1.20 if you're hanging on to it with me. Broke wing butterflies defense trades got filled. I got filled for $1 and $1.75 at these highs. So even with the executive decision to take a small loss on daily profit play, which I regret right now, but I still made be 275 on the winning side. Okay, so we'll see where this final 27 minutes takes us. Hopefully somewhere good. All right. So we did poke some fresh lows today that might push us to like some type of 5+% pullback. We are down about 5.7% in the S&P. NASDAQ from the recent top and today's low, slightly lower. NASDAQ has had a correction of over 8.74%. Pretty decent there, I guess. Dow, correction, pretty big fake out here in the Dow, 5.52% correction. The Russell, a little bit uglier. Recent highs kind of rolled over. Dow was down 9.3. I mean, I'd say respectable pullbacks. Let's see here. Bought UNG 1250, sold at 15. We'll be waiting for pullback to buy more. Looking at your $20 target. Nice. Yep, I like me some UNG. Let's go. So VIX, retreating off the recent highs. Highs yesterday up into 28s. Highs this morning up around 27.5. That's how I was able to calculate some of our tops and bottoms today. Get those broke wing butterflies in for daily profit play. Dollar index. Oops, I'm in the wrong chart here. One sec. Let's go to dollar index here. Dollar index, 2 days of indecision. Let's check currency strength on the day. Anything substance-wise? Swiss weakest. Kind of love that. And Japanese yen strongest. Kind of love that too for now. But a little bit wider. I mean, even yesterday was kind of crazy to see so much volatility in the equities market, but little to no surprises in the currency land. And then we've got 80 on the yen, which has settled back in, but I'm kind of loving this weaker Swiss for right now. Hopefully that is something that we can sustain. Let me do a quick spot check on Swiss yen. I mean, pretty decent candle. I'm looking for a pattern here. I mean, if we can break this trend line, break these lows, I'd love to set up a sell trade, stop above, and just let this thing roll over. There's a catch-22 to this trade though, because if the Japanese yen gets really, really strong, I don't think that's a good sign for equities at all, because that's going to be a total risk-off trade if that's the case. And Swiss yen, may not be the play because maybe the Swiss is weak, but the yen is not sustainable. Like the yen basket has to be all one direction. Like the yen has to be moving. Like everything you look at, Aussie yen, CAD yen, Swiss yen, Euro yen, pound yen, New Zealand yen, dollar yen, they all have to go in the same direction. And then that shows, okay, the yen is in control. The yen's in the driver's seat. But if it's just the Swiss yen looks this way, but the dollar yen looks another way, and the Aussie yen looks another way, it's not a basket trade. And usually the Japanese yen will kind of fire off like with that basket. All right, 224. Come on, Bulls. Give us something impressive here into the close. See if we get a run back into like 35 or 40 today. We're late enough in the day. That butterfly trap should be filling up here. Let's get like a 40 to 45. Come on. Okay. Let's give it a little bit more exciting here on this double up. So this one's worth $900. We got to settle in around 6,600 for this one. This one's worth 1,800, but we got to settle in around 66.45 to 66.55. I mean, we got 23 minutes, so we'll come back and just keep spot checking. All right. Anyway, I left off on dollar index. What else we have here? The Dow was up 700 points from what coincided with the Fed speaker not ruling out December cut in a speech. Contradicted by another Fed speaker late. I mean, yeah, it's just noise. I mean, look at the Fed heat map today, or the probabilities. We went from 70+%. We're at 69.5%, which literally yesterday this was like 70+% pause, and it's flipped all the way to 69.5 cut. Just absolute uncertainty from the Fed, absolute uncertainty from the market side. The big key levels is that look, the S&P, if we're going to maintain bullishness, we have to take out that 50-day moving average. We have to recover. Basically, Nvidia's candle high. It's like we have to take that level out if the bulls are going to continue to get into their kind of complacent drift to the upside. Otherwise, we could have yesterday's candle could just serve as one giant candle, and price just stays inside of it now for the next few days. Right? Maybe holiday trading next week is very quiet. In fact, that might actually be perfect for us at Daily Profit Play. We might just take a bunch of nice solid winners if the market makers kind of do their job every single day. Okay. All right. DXY. Let's go back to this. So dollar index. If we break to the upside, I do think that means more downside in the equities market. That would be a risk-off trade, in my opinion. There's room to get back where this falling wedge started at 102. That's kind of been my eye. When this bottom started, I thought if we do break a falling wedge, 102 is probably the target for the bulls. And so far, so good. I mean, this low is 96. We're coming up to 100. That 100 handle seems to be some near-term resistance. But if we break and go above it, risk off pushes the dollar up towards probably 102. If it's risk on, then this turns right back down and comes back to, let's say, 99. We kind of defend this 100 handle. We'll see where the dollar ends up leading us. Oil sliding a little bit lower. I do have some futures trades. My oil futures trades out mid-December, and it has to stay above $50. Pretty sure we're going to be finding that trade for Project Options Edge. That should be for a 220 winner. UNG 1463. Yeah, I mean, I'd love a break above 1516. I'm going to try to get UNG up into the 20s before I take profit. I'm holding some deep in the money calls, and I'm holding some shares of UNG. Gold, just putting traders to sleep these last couple of days. So 1, 2, 3, 4, 5 days of indecision on gold. I wouldn't think anything of it. I would just wait it out. I think gold's a great investment. Be long, just dollar cost average into it. If it accumulates here more and just goes sideways, all of these moving averages catch up. The 200-day is still, I mean, I have levels in to buy the dips here, just dollar cost average levels at my moving averages. But the one thing I need to kind of resume my bullishness is we have to hit this 200-day moving average. What's that question there? How come markets are taking what could well be inaccurate employment data whilst previously trading a data blackout? I mean, the markets are doing the best they can. It's like, I don't think the markets really put any major emphasis on any one thing. I mean, if it was all tariffs, you saw what happened in March and April if it was tariffs. So it's like the market takes in this short-term data, chews it up for the day, and then decides it's going to do something with it or not. It's like yesterday, I mean, we knew this coming into this week. What did I say? NVIDIA earnings plus the first time we're going to get some US data in a while, right? So what did the market give us for the week? A bunch of noise. Yes, it was a down week. I mean, we knew going into this week we were below the 50-day moving average when the week started. So if the bulls could not get above it, we're in an indecision period right now, and we have to respect that, right? So it's like I'm just not willing to take on like short-term risk when the market is still potentially indecisive. I think it's very reasonable for the market to flush down, maybe to a 10+% correction. So that 200-day moving average, the previous all-time highs. Look at some fibs. You drag literally the April low to the all-time high, which would look like this. I mean, I know I keep saying my charts are messy. I can see through the stuff you can't because it's probably just moving averages and boxes. But take this low, take this high. I mean, fib zones are still here. There's a 23%. There's a 30% retracement level. Here's our previous all-time high, which is at a 38% fib. There's also moving averages here. So if we dip below it, come back above it, like that's a corrective flush that needs to happen. I'm not saying it has to hit the 200-day, but if it does, it's also going to probably trigger some near-term support. So I don't know. That's kind of my 2 cents on it. There's still support in this market. It definitely does some psychological damage by just this market is, 2% correction by the dip, 1% correction by the dip, 2% correction by the dip. And all of a sudden we have a 3% correction and we have a 5% correction. We had a 3% correction yesterday. So the trips to the downside are getting a little bit more violent. And the bears are trying to maybe grab the upper hand here, but they're so far they're failing, right? So far. All right, let's go back to gold. Indecisive, but I will scoop up all the gold that I can. I'm looking to buy into the 144 200-day moving averages. Even if we consolidate here and the moving averages come up and test, I'm still going to buy some gold. I would buy gold at moving average supports. I would buy gold this previous consolidation zone. I mean, even if we pulled back to like 30%, or I'm sorry, 3,000. If this was a multi-year pullback, and we come back to like a 38% fib, it's like I'll still buy gold at 3,000. 29.39 is a 50% move. I guess it's a little bit higher there from the all-time highs. So 29.98. I mean, if gold ever came back to 3,000, I'd still buy it. And longer term, I'm probably targeting 10K on gold in the next maybe 5 years. Okay. Silver, a little bit more volatile, but I feel the same way. I think that silver has shown its cards as a better trade than gold this year. We outperformed in silver, which has been pretty exciting. It's no longer just an industrial; it's more of a industrial plus strategic. So I think that breaking all-time highs in silver was pretty meaningful. And I listened to an interesting session where the phrase that stuck with me is gold could become unaffordium and silver could become unobtainium because it's going to be harder and harder to create or find silver, and then gold is just going to be so unaffordable, like per ounce. So either people are hanging on to it, hoarding it, wanting delivery of it physically. Obviously, there's ways to kind of paper trade gold. I mean, the best case would be you have physical gold, but as somebody that trades markets and you don't mind using derivatives, like you can paper trade it and get the spot price benefit as well. Okay. Inflation print would be interesting. Yeah, when is the inflation stuff coming out? It's not on the calendar next week, is it? Let's go to Forex Factory for next week. PMIs came out today. Let's go next week. We have Tuesday the 20th, so Monday nothing. Tuesday the 25th, retail sales. Cash rate expecting to cut out of New Zealand. Thursday, nothing. Thursday is also a U.S. bank holiday with Thanksgiving. Friday, Black Friday. Markets are open for limited. I think the markets close around 1 p.m. Eastern time. So I don't see anything next week that's really meaningful outside of retail sales. That's on Tuesday morning. So we'll keep an eye on that one. Let's go into the end of the month. First part of December, I don't see anything. CAD employment, we already did our non-farm. I'm not sure when non-farm is going to happen. Yeah, I don't know. I honestly, like, the news is so far behind and lagging right now. It's like maybe they just try to use the time into December to catch up. If we can get these BLS prints or get whatever news we need to make a decision on by the end of the year. Does it matter that we're getting September prints in December? Maybe, maybe not. Okay, I don't know. So it will be interesting. I am still watching inflation. I mean, Trueflation shows that we peaked and we're pulling back a little bit. Christian, so in my Project Options Edge class, we had a few master classes on that. So inside of I'm not sure where my services went. Here we go. So daily. Inside Project Options Edge, right here, I teach the ratio spread. If you ever want to do a one-on-one session with me, I'm happy to share what that is as well. Versus buying a course, it's up to you. So there's a couple ways to get it. If you want just a little one-on-one time, that's great. Or you want to get into one of my classes where I take all these trades, that's great. So I did ratio spreads today on the SPY and the Qs. And actually, I mean, I guess it was a combination. It was like a combo ratio spread. It was a 1-1-1. So I bought a put, sold a put, sold a put. So I technically have one naked put, but I have a profit trap. And the one that I did today for Project Options Edge, I did a trade on Costco today, and I did a trade on the QQQ and the SPY. SPYs and Qs were $493 of income. And I have a $2,000 profit trap on the SPY, and I have a $1,000 profit trap on the Qs. I'd also be willing to own those shares, and they would be literally 50% off of all-time highs, which is a huge discount. And then Costco would be 61% off of all-time highs, and I have a $4,000 profit trap on Costco. And it's also pretty expensive, but it's crazy because the ratio spread I put on Costco would actually be a more expensive underlying than the S&P and the Qs. Like my put would be 275 in the Qs and 320 in the SPY, and Costco is a 460. But I also think, and I warned this in the trade alert, that I said there might be a split by the time that we get that trade to expiration. And just because the stock price is, what's Costco right now, like $700, $900. I mean, we were up to over almost $1,100. It's like it wouldn't surprise me if we did like a 10-for-1 split or something on Costco. All right, 12 minutes to go. Come on, bulls. I'd love to see this fly juice up into a profit. We're now starting to get another profit track. Come on, man. Get a push to like 35. 35.40 would be a great push to the close. Dollar for dollar, that'd be a pretty fat profit trap if I can get it. But it's kind of stickier on this 19. There's no real gamma levels there. That's what I'm kind of watching. It's like either get to 66 or get to this positive negative gamma pivot, like one of the two. So, and again, I don't need it to like close there, but it's like if it gets up to this is 30, that'd be helpful. 45 would be fantastic, and even 6,600 would be fantastic. It's like don't close here. That's kind of all I'm asking. Don't close here. So let's see if we get some late action here in the final 10 minutes. Yeah, I mean, it's very possible that we split based on this price. I mean, this is it's a liquid stock, Fortune 500 company. It's not super affordable at $900 a share. If anyone wants to trade options around it, like selling a put on this is pretty expensive. I mean, it's actually more expensive to own 100 shares of Costco. It's $90,000 cash versus the S&P or the Nasdaq, which are $60,000 cash. So it's kind of crazy. So it wouldn't surprise me if we have a split. And if you already own shares, then you get more. But it would just make prices a little more affordable. Like we get back to $1,000, it's a 10-for-1 split, and things all of a sudden start kind of back over to $100, and the cycle continues. Core PC on Wednesday. I didn't see that in Forex Factory. Why was it not high impact? So you're talking next week? Yeah, okay. It says tentative. All right. So it's showing tentative on the calendar. We might see it, we might not. I'm not going to hold my breath, to be honest. Yep. All right. What else? We did gold. We did silver. Bitcoin, 84.5. I sold a ton of premium today on Bitcoin, not to take on more shares, but to lower my cost basis. I lowered my shares of IBIT down by $11. So IBIT, which is already at a pretty hefty discount. Where's my Bitcoin at? So BTC. There it is, IBIT. So I mean, I generated about $1,100 in income to just lower my basis. So my cost basis on IBIT is down below $30 right now. So even though this has taken away some pretty serious gains, I mean, I've had a 30+% trim to my profits on Bitcoin, which has not been fun. But my cost basis is still $30. I do wonder if this area is going to offer some support. I do have some puts in here that I might get assigned more. If that's the case, I'm also going to repair those. I was a little bit more kind of alpha driven on Bitcoin to kind of be like a gainer for the year. I thought with the administration being pretty pro crypto, I mean, you had a freaking Trump coin, a Melania coin, you got Griff City going all over the place. You got the Trump family that's made $5 or $10 billion in their net worth because of crypto this year, which is insane. And yet, maybe that's just the amount of leverage that's like, you know what, screw this. And the market just needed to cleanse. Too much leverage, too much stuff, and just needed to get it out of its system. It's I think long term it's still fine. It's just hasn't been a fun year. Gold's up, gold and silver up 40, 50% respectively. S&P and NASDAQ still clinging to gains for the year. And Bitcoin's one of the very few assets that's still down. So I would say that's an odd move, especially when money supply is still up. And we have an easing Fed. We're talking about debasement, all this other stuff. Bitcoin should be a part of that conversation. So anyway, time will tell. IBIT. I just sold some calls. I just sold some calls, and they were good enough premium. I grabbed about $11. So the trades that I do have pending, I did some naked puts at like the. I think we put this in for Project Options Edge, just like a 59, 56, 53, and 50. I'm going to take those shares. The break even on that assignment would be 52.36. I'm going to go in and basically immediately sell like a $52 or $53 call and just try to collect as much premium as I can within a time frame I'm comfortable with, and just lower the cost basis. I can always get back in to add more exposure, but right now when we are sitting at a a terrible price action look. I mean, Bitcoin does not have any signs of stopping right now. And there is some support technically, but if it doesn't hold, if we take out this low, Bitcoin's probably the better price to look at. If we continue to plummet and take out seven, here's a key spot, right? I thought if we tested this trend line and bounce back up, there's support. If we come down to this level here, that's 74,000. That's also previous all-time highs. So if we have 70,000 ish offering support, like it better get its crap together, because we're talking some massive, massive deleveraging here. And my outer trend line is, all the way back into the 60s. But, then I would question this. If we come all the way down here and do some damage to this low, part of me looks at this as, if we come back up, I want to take some profit. Because yes, it might go higher, but if this thing is just going to be a massive bear market reversal and just this ultimate reset of Bitcoin, I can always get back in, but I don't want to be stuck holding the bag if we're going to face a giant down move. I did it was a January 2027. So I just threw it out for a year. I'm just simply lowering the cost basis, collecting a big fat premium, and that lowered my cost basis now where it's like I'm giving myself a little bit more cushion. Okay, we're at 66.05. I'm going to check out this profit trap here. I've got $500 running. All right, I'm gonna kind of switch gears. We got 5 minutes left. This is a profit trap that I need to pay close attention to. So I'm up $400. Max profit here is about. Let me see. That fill was for $13.90. Max profit's $8.90. Let's see if we can maybe get down and actually stick to 6,600 today. Okay, we're at 66.04. 482. Let me see if I can set this thing for what on earth? This iron fly. Okay, so it's trading for so it's 13 some debit. Trying to think. Max profit's going to be 1390. 1390. So $5 would be my lowest debit. We're at 98. I mean, come on, dude. All right, this is going to be a slippery close here. 509, 522. And this is, like I said, pretty magical stuff in the final minutes, but I don't want to let profit like this slip through my fingers. So let me see if I can get something good. All right, we're at 6,600. It's like I couldn't. Oh boy, sounded bad. I think my kid just fell upstairs. All right, so 8. I'm going to put in a $6 debit and just kind of keep a close eye on this one. $99. I'm going to try an $8. That'd be $5.90 in profit. Let's go 8. Just got filled for $8. All right, I took a profit trap there. Now I get to see where this thing cash settles. So $13.90 minus $8. So I made $5.90 minus my $2.25 daily profit play, which is at a full win right now. If you're still holding daily profit play, it's a full winner for $1.20. I regret closing that, but I'm still net profit on the day. So anyway, what I say here, $13.90 minus 8. And then I took the $2.25 loser, but I added a $100 broken wing and a $175 broken wing. I'm up $6.40 on the day. My other risks were pretty small, $55. And $1.30. So I made $4.55 in the day. I'm just gonna watch this now. We have 3 more minutes. It's trading for 760. We're at 6,600. That's pretty perfect, honestly. But it's so tricky and slippery here at the final couple minutes. I could have this thing go all the way down to like $6 and be almost a full profit, and I could also have it jump up to like $10, $11 and take away a chunk. So let me see if any of these flies. So that one's down. This one's down about $50. That one's a full loss. That one sucks, man. I was up $600 in that trade today. But again, similar to what I just took the result on, it's like this one could pay me $800. I'm sorry, $1,800 for a risk of 130. So I'm just going to take the 130 loss. This one took profit on. That was that 590 winner. This one is down, max loss. This one's down, max loss. So yeah, I mean, I can swing those max losses. Let's see where these are going to close for the day. 780, 760. So I'll see what this thing cash settles in 2 minutes. I'm doing both. Treasurer's asking the question, you buying gold directly? I'm buying CEF, PHYS, GLD, gold futures, and then I do have some gold bars, like physical gold bars that I bought the last couple of years. Not even thinking about this situation, which is like gold looks like, a great trade. It's just I've had gold bars in, for myself for a while. All right. Yep. Let's see here. Bitcoin treasury companies are dropping one by one. Bitcoin market won't allow. I know that. I think that's what the pain trade is. I think that right now it's like, oh, you like that Bitcoin stuff, and you want to sell debt on it. You want to sell like bonds to buy more Bitcoin. It's like those companies are going to be liquidated, and I feel like that is the pain trade. And when it's done, and those idiots get cleansed, it's like then you're probably going to see Bitcoin go back to normal. But it's going to be some pain. Son of a bee! Look at that thing. 575 cash settled, 555. It's like that's almost max profit, man. Settling here at 60. That's like literally spot on. Son of a biscuit. That was max profit. Damn it. So 1390 cash settled at 490. That would have been a $900 winner. I mean, I made 590. I'm not mad, but $900, and then I take my minus 225 daily profit play, but I still make my 100 and my 175, and I take off my risk of 55 and 130. So 765 on the day versus like $450. Wow, that was like pretty perfect. So here's, this is the chart that I posted, and I'm kind of pissed that I didn't hold daily profit play a little bit better. But why did I close it? Because we were up here. I'm looking at these profit traps. I know the profit traps could pay me a lot of money. I thought I can easily make up $200 versus trying to make up $400 if I'm wrong. So I made the executive decision. Daily profit play. If you held it, end of day, market makers did their job. Full win for DPP. Okay, so if you hung on to it, awesome. But we're right back in the middle of our, this is where the market started today. We needed price to stay below this blue line, above this blue line. It did. And then for my profit trap, all these yellow boxes here, it was the midpoint. So anything that was the middle, where's my brush? So the middle of this was a profit trap. And this was like ideal profit at the end of the day. Middle of this, like pretty perfect. So these are small losses, but this one, that would have been a nice little $900 winner. So this was risking like 130. This was risking about 125. I think this one risking like 110. So, it takes some risk to make some money, but I'll say I'm overall pretty happy on the day. Certainly a lot better than yesterday. I didn't quite make all the money back. I lost 785 yesterday, but made back about $500 today. So I'm close, which makes the week a lot more manageable for next week versus getting beat up. And I'm a little pissed at myself yesterday for not calculating the updated VIX and putting in another defense trade. I missed it by 15 points. So, and all I had to do was make the adjustment on our VIX calculations that we do for daily profit play, and we would have contained that low, and we could have grabbed another, couple of bucks with a profit trap in there. So, it is what it is. But the nice thing is to come back for a bounce back win, take a nice little profit. Yeah, a 490 settle would have been sweet. I'm not going to lie. 1390. Yeah, $900 profit would have been pretty helpful today. So that would have helped me get most of the loss back from yesterday. But anyway, that's the day. Nice way to come back for a Friday. I can delete these now. Okay, and let me see what we have for double ups. Uh, 66s. Okay. All right, what's going on here? Storing gold is a pain. Yep. Thanks, Zach. Appreciate that, man. Also saw that Tom Lee's $3 billion in loss from ET. I mean, yeah, I get it, but that's the thing. Is like, I don't know, just leave it to greed, right? It's like that's what it is. It's like leave it to greed, and then what happens is you get greed, you get leverage, and you build these financial engineered things. Like, I mean, MicroStrategy is essentially just a Ponzi for Bitcoin, and whatever Tom Lee's doing is the exact same thing for Ethereum. And the market's like, hey, this thing doesn't go up indefinitely. There's some risk appetite here, and we don't have it right now. So it's a flush, and I think that's the pain trade that has to come out of the system. And funds like that might blow up, and it's understandable. I just hope that it doesn't do irreparable damage to actual Bitcoin. But it's survived 70% corrections before, and it might have to do it again. But it's already down 30+%. I just think it's a little odd to have such a pro crypto regulation or pro crypto administration and having BlackRock in the ring and other things with a spot price and just watching it tumble. So it's not fun to watch. I mean, my alpha was definitely, I was up about 40%, 42% for the year. That was my highest watermark for the year. And I've given some of it back. I'm up 30, 34, 35% right now, which is still a pretty solid year, but I'm not loving that I've given some of that back. So anyway, all right, what do we have here? Omar says out for 0.2 in daily profit play, full profit on defense. Sweet. So you get your defense trade plus your, that's a couple $100 in the day, right? Very good. That's awesome. Yeah. Okay, good. So sounds like we had some good results on the day. Daily profit play did the thing. So DPP net winner on the day. So I had the DPP, standard trade. Okay, good stuff. 500% on a DAX short today. Wow. Good for you, man. Impressive. So I'm assuming that came because of the gap lower. That's a really decent chunk. Good stuff. What's FTSE doing? Pretty healthy correction across the board. Brazil, Latin America, Japan. Yeah, I'm watching. Okay. I'm trying to think. We did currencies. We did oil, gold, silver. We did some Bitcoin. Caught the close. Grabbed a little profit trap. My bullish or bearish on the dollar. Well, funny you ask. I think right now that the dollar is at like a really critical spot. Here are my thoughts. I think that the direction of the stock market is going to be tied to the dollar. So if the dollar is going to break above 100 and get up to 102, I think we have more pain in the stock market. I think there's going to be another maybe 5+% correction in the stock market. We might hit that 200-day moving average. We might hit those previous all-time highs of 61.40 if the dollar gets stronger. So if the dollar goes up, I think we have risk-off trading still in the stock market. If the dollar holds, which you can see here, we're trading around this 200-day moving average. This is the 10-month moving average and the 200-day moving average. If we hold here and fall back down, then we have risk appetite coming back into the equities markets. So that's kind of my thought on if the dollar gets stronger, I think it's a risk-off trade. If the dollar comes back down, let's say the Fed probability of cutting rates in December increases, the dollar might get weaker. So I don't know. It's like it's just something that's like I don't have a short-term trade. I said if you want to be short the dollar, I think you have to look at this. If you want to be short the dollar, you have to wait for this trend line to break. Okay. So that way it's like if price does go sideways, test the trend line. If it fakes out and goes back up, I mean, this is still a bullish recovery. This is still a squeeze trade from the crowded shorts that happened earlier this year. So if this is still going to be the path of least resistance is the upside, then the dollar could still squeeze up to 102, but that would not look good for equities. Okay. But if it turns over, then we have a little bit of a rally into the end of the year. Maybe things stabilize where, what are we doing right now? Keep an eye on this for next week. And I'll post a video on TradingView here. I'll probably do a quick one over the weekend. But because we had such a nasty day yesterday and such a nasty day on the 10th, I wouldn't be surprised if the markets are noisy inside of this area. This is a 3% candle that the markets can play with. And we don't really get any more bearish. We don't really get any more bullish. We just have some chop. And that'd be interesting. Like that'd be nice to see that the markets don't go down anymore, but the bulls might be reluctant. So I'm saying watch this 50-day moving average and can we get above it? Because we honestly might trade from this high to low and just have like a chop fest for the next like 30 to 60 days as we come in for the year. Okay. Am I skeptical? Yes, but I think that if the market's going to continue to push lower, it is setting up a correction that is needed because we haven't had a correction literally since the bottom in April. A meaningful correction. Like this is one of the longest stretches without like a 2+% correction in a long time. So I think a correction now is fine. And then we can clean the slate 2026. Market gets a reason to pump. We're at a decent pullback level. We have a 10, 15% pullback. And then the market tries to do whatever it can to get up to all-time highs. Get a strong Q1, get a strong first half of the year. And then as it comes to like late summer into the fall, if the Trump administration can brag about like everything going well, stock market at all-time highs, AI this, crypto this, blah, 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 everything's great. Vote for the Republicans, keep us in power. We have all these amazing things. It's just going to be a grandstanding effort. So if we're going to have a correction, now's a great time to get it over with because you can fix it going into next year. But if we're sitting here at highs, I just think the weariness grows of like how long this thing can keep going until it becomes like completely euphoric and it just blows off the top. And then we talk about a deep correction. So would I rule out a December stock rally? No, I wouldn't rule it out. But right now, I'd say that between yesterday's candle and next week having holiday disrupted trading, I would see that if things are pretty calm next week, if they're just kind of chill next week, then we're probably trading inside of yesterday's candle for the entire week. Okay, so we have to be prepared for that. Um, yeah, I mean that's the plan. Just it trades inside the candle, right? Yeah, but Santa hasn't shown up for a couple years. 2023, 2024 did not have Santa rallies. The technical Santa rally is Christmas Eve to New Year's Day. That's technically the official Santa rally, but I know a lot of people say the Santa rally starts Thanksgiving to the end of the year. So if we have a holiday rally, great, fine, but I don't know yet. So I'd say right now, because we're under the 50-day moving average, we have to reclaim that and we have to stay above it. We will know this in daily profit play. If we can reclaim the 50-period moving average and also get into some positive gamma for the days, then we will start to see that drift to the upside continue to happen. Okay. All right. You already talked about crypto. I did. I mean, I talked about Bitcoin. Look, I like Bitcoin. I still do. I just said that what is happening right now in the crypto space is I think there is a deleveraging that's going on here. I think that your financially engineered Bitcoin positions, your financially engineered Ethereum positions, all these things happening that they just need to come out and cleanse the system a little bit, and this is what's happening. So that's where we're at. And I think inevitably, like the dust settles, and maybe we get a bounce here. But if the Fed cuts and we debase, and it's like there's still a lot of good evidence for Bitcoin to go higher. It's just technically speaking, right now, nothing's looking good, not yet. So that's where we're at. Cool. All right. I'll let you go for today. Have a great weekend. Come back and join me on Monday. Daily Profit Play, bright and early, same time, same place, 9 a.m. Eastern Time. We're live Monday through Friday. You can jump into my Telegram channel, join me in Zoom. You can also jump into the YouTube stream. It's youtube.com/financial wars, Monday through Friday. So, okay, good stuff. Have a good weekend, everybody. Talk to you soon.